Welcome, everybody. If you don't already know who Michael is, I'll let you kind of take over and introduce yourself because I probably won't do justice.
All right. I'm Mike Simonsen. I am the founder CEO of Altos Research, and we do market data. We track every zip code in the U.S. every week, and every home on the market and all the pricing and all the supply and demand and bubble up those analytics for a lot of people who care about it.
So yes, today this is gonna be your show. I'm just here to kind of to fill some questions for people. But as you know, right, as real estate agent, we are all CEOs of our own company. Even if you're a solo agent, you're on the team, you run the team. So to run a business, you need to have your leading and your lagging indicator. And for those who are not very good at tracking, that's what you would help them with. So I'd love to turn it over to you and have you kind of let us know how we could use a service like yours to help us grow our business and run our business.
Terrific. So what I thought we'd do today is I've got some slides where we're going to actually look at current data. Here's what's going on in the market in the U.S. so over the whole U.S. So like where are we right now given all the craziness that's going on in the world, and then I thought I would take a little bit of time and actually dive into some Altos reports so you can kind of see how it's in action and how you might work with clients and chat with clients. So along the way, it's okay if you see questions and you want to interrupt and interrupt, or we can wait till the end if you've got some that you want to discuss along the way. But either way is okay with me, and so I'll just share my screen and we get started. How's that sound?
All right, sounds good. Your show.
Okay, let me. All right, share here. And here we go. I've called this talk Making Sense of an Unprecedented Real Estate Market. If you'd asked me at the beginning of March, middle of March, it's March 17, we go into lockdown in San Francisco. If you'd asked me what I expected of the market, it never would have been this. Like, I never would have guessed what we had going on. I expected fear and frozen and no action and potentially distressed sales coming to market. And like, I would have guessed carnage of really scary real estate market. But what we do at Altos is we measure every zip code in the country every week. And so we look at it every week, like what's happening. And so we had a couple of weeks of, pullback in March, but then beginning of April, we were like, oh, we've got some buyers out there and prices are up. And it just blew my mind. So unprecedented, surprising real estate market now. What I thought we'd do today is actually dive into some of that data. Here's what it's looking like, what's looking at right now. And some of the really powerful stuff we have in the Altos data are the leading indicators, as you mentioned. So we'll look at some of the leading indicators, like where is the market going to go, and how we know that where things are going to go in the next few months. And then I'm going to take a little bit of time to actually look at how you can look at a report, how you can share it with your with your buyers and sellers, how you can work it into your script when you're talking with folks. And then at the very end, a little bit of time, how you can, book time with Altos to strategize how you use market data with your business. We did create a coupon code for lab coats. All the registrations, people who are on the webinar, LCA 2020. If you're signing up for Altos, you get a free month. So LCA 2020 in the little coupon code. But I'll share that again at the end. So we'll wrap up with that. So let's start with the data. So record low inventory and still falling. This is a chart of single-family homes for sale in the whole country. At Altos, we track the active market and have been doing so for almost 15 years. And what happens is, you can see the January low points each year in inventory. You get new inventory gets listed in the first quarter, second quarter comes on, and then we peak at June 30. By July and August, now it's the end of the summer. Stuff is starting to get absorbed. We start maybe, you want to move it before school starts and maybe do price cuts. And so you can see the cycle of inventory. Normally, you have maybe a million, 1.2 million homes for sale at the peak of the market. And what's been happening over the last 10 years, since the bottom of the mortgage bubble burst, since the recovery started, we've had 10 full years of market recovery. But in that time, each year, we've had fewer and fewer homes for sale, fewer at the peak, fewer at the trough of January. And it turns out that because we've had low interest rates, record low interest rates, in that time, everybody has a really good mortgage. And so when you go to sell, you go to move up or move down, it's been really a good deal to keep your property and save it for income. So each year, a few more homes are saved for income property, and they're not for sale. So our inventory has been shrinking year over year, really because mortgage rates have been really cheap for a decade. And so we started, you can see at the right side of this top chart here, you can see we started January at record low levels. We started to curve up in our normal first couple of weeks of March, and then the crisis hit. And so we've had restricted new supply. There's some listings, people aren't moving. But as we've had continued demand, we've had more purchase demand each week than we've had new supply. And so our inventory levels are falling in a time when they're normally climbing. So we're at this crazy low inventory level. It's basically true through the whole country, where we might have 1 million or 1.2 million homes. We have 660,000 homes for sale, single family homes for sale in the whole country, like 30 to 50% fewer than normal. And it was already crisis level, like already shortage. This is true across states. So I just grabbed a few of the different states. California at 42,000, Texas at 73. You can see the trend. This little spark line here is the last 3 months of trend of each of these big states, and each week falling total homes for sale. So that's the supply side of the supply demand equation. We and like I said, it's pretty much true across the country. It's true across price points. On supply, the one thing we do want to keep in mind, and it's very important, I think, for us as professionals in the space working with buyers and sellers, are the 4 million loans out there in forbearance. There is a big chunk of the country who have been hit, unemployment, job crisis, and we created these mortgage forbearance programs where you don't have to pay your mortgage if you've been hit by the pandemic. 4 million people opted into them. At some point, those 4 million people are either going to have to start paying their mortgage or sell their property. This 4 million is very different from the last crisis 12 years ago. And the biggest difference is that everybody right now has a really cheap mortgage, and they have, and there's record levels of equity. So that means that even if you lost your job and can't pay your mortgage right now, you are much more likely to A, try to figure out how to hold on to that property because it's a really good deal, or B, if you have to sell it because you have equity, you can just sell it, as opposed to a short sale or walking away from an upside down mortgage, which was a big factor of the crisis 12 years ago. It's a very different cycle. So these are out there. The forbearance programs were initially 90 days, 180 days. So 180 days would go from end of March to October. So we should keep an eye on the market, our sphere at that time. Are there folks in our sphere that are going to have to emerge from the forbearance program in October? And then again, next April, 360 days after those programs started. So those are going to be the big dates to pay attention to. As of right now, one of the reasons that inventory is low is because we're in a foreclosure moratorium. So even people who are unaffected by COVID and couldn't pay their mortgage and normally would be in there'd be a few thousand homes a week that are going into foreclosure. They're not going into foreclosure right now. So because that's so all of these things, the policy is designed to help the homeowner, help the people who are in their home. And one of the things that's happening is the policy is keeping properties from being listed. So that's where we are right now. And it's and those are the dates to keep in mind on supply.
Would you say because it's not like the last time with the foreclosure, Mike, is maybe because there's equity this time around?
Yes. So record levels of equity. We started the year with record levels of equity in the US. We've had 10 years of rising home prices. And then we hit the crisis and we've had month over month increases in home values. So your home is actually increasing in value, even if you haven't been paying your mortgage, right? So coming out of this time, there's still gonna be a lot of people who got to figure out how to pay their mortgage again. But at least they're not going to walk away from their house and go, yep, bank deal with it, because they've got equity and they got a pretty good deal. So there's going to be a lot of things working out there.
But that might be actually an incentive for them, or maybe push them to list the home, because then they will pay back their mortgage and the payoff, right? Got to be.
That's right.
So now that's how they catch up too, and they go to either a smaller home or something different,
That's right. Or, at least you've got your capital, you've got your cash there. So I do think those are opportunities. As soon as we figure out, at some point the programs are going to have to end. And there are people who are going to need to sell their homes. And some of the opportunity might be, look, you've got equity now. Let's make sure you get it. Who knows what's going to happen, if this thing drags out for 2 years, what happens then? So
one thing to know about the indicator, which is great because all the data you have, the second thing is how to take advantage of it, right? What to a real estate agent out there who are smart enough to find how this data is and market through this segment, so that when they think about selling, you're the one that comes into mind.
Yeah, and I'll make sure we spend a little bit of time using some of the Altos reports and how you can do that with your clients, your buyers and sellers and contacts. We'll spend a little bit of time with that at the second half. So, so supply is super low and demand's been high. So prices are climbing. So home prices are at record high levels. And the red line in this chart is the median price of all homes available for sale in the US. The little green dot is the year over year change. You can see where it was last year at this time, and you can see the last 5 years here. And so we know that second quarter is, you get the best inventory, you get the most buyers, so you're pricing most aggressively. Then in July and August, typically, now you're like, well, we have these houses on the market, they didn't get an offer yet, we got to do a price reduction. We want to do it before, you don't want it to get into September, now school's started. So that's a normal cycle that happens. So prices back off in the third and fourth quarter. And you can see they start January a little bit higher than the year before. So you can see the seasonal pattern there. What you can see at the right end of this chart is this little tiny dip right here. That was March. So we could see the pullback in March right here. Whoops. There. This little pullback in March. And then April, May, June, prices climbing week over week. This is supply is ultra low, demand is held up. And And this is what's happening to pricing. So a couple of things you see there. One of the questions I'd been asking myself through this whole period is, if we're at 18% unemployment, how can we possibly be having rising home prices and like demand? How can that possibly be happening? One observation is that because we've had 10 years of a bull market in real estate, that a lot of the unemployment right now, lower paid service sector folks, a lot of those folks were kind of already locked out of the real estate market. It was already hard for them to buy. So the buyers that are there are people who are, well-paid professionals who can perhaps work remotely and have not felt the stress of unemployment here. And so in those times, those folks have been like, they're keeping their buying plans. And in many cases, maybe increasing, triggered now, like, hey, maybe now's the time to buy. And I'll show you some demand indicators too. What's interesting about our price data, and because we watch every home in the country every week, there's real signal in there about where transaction prices are going to be in the future. The green line here on this chart is the cohort of, we call them newly listed properties. Every week, there's a set of homes that get listed, and they get listed. The sellers and the listing agents are listing when it's time to go price your house. You look around and you say, wow, there were multiple offers down the street on that last one. We're going to price this one a little higher to take advantage of that. And so you see, it's called wisdom of the crowds. It's an economics term, the wisdom of the crowds. And this is really like the sellers, the listing agents know exactly where to price the house. And it shows up in this green line, which peaks a month before the red line. So the new listings come on and like they go, and then they start saying, okay, now it's late in the summer. We're going to price this one a little lower to make sure it moves a little more quickly. And so it normally pulls back. And then after a month of that, then the whole market's pulled back a little bit. So when you see the inflection points, we can see in January of this year, the big steep climb in the green line. That big steep climb in the green line was January is our reset of the market, but the listing agents say, there's a lot of demand out there. We're pricing, and you see this steep pricing climb. And so 2020 started off as a really hot market. What's interesting now is that this green line is showing us, normally by July, the new listings start backing off to try to get moved before the end of the summer. And you can see that the little red dots year over year, how new listings have pulled back by this part of the season already. This year, they haven't pulled back yet. And so we've got two things. One, we've got a lot of demand, and we also have like a delayed seasonality, at least a month of our seasonal peak. So we're peaking end of July rather than end of June. Usually it's June 30, like clockwork, and then things start, calming back. And so we have a delayed seasonality. So when you're working with your sellers right now, or buyers even, you're working with your clients in this case, you said normally prices are pulling back at this part of the year, but we've had a delayed season here. So we're still in the peak of the market. So that's important for your listings. It's also important for your buyers to know about the competition that's out there and where pricing is. So you can see the very end of here, our new listings cohort is still climbing this year. And so what happens is home gets listed July 17th. It's now on the market for 30, 60 days. Maybe now if it's 60 days, we do a price cut. Then it gets an offer in, say, September. And then it closes in at the end of September, maybe October. The traditional way to look at housing data are the transactions that happen, the closed sales. You won't see that until October or November. but we know you can see it right now in the data, in this new listings data, right? You can see exactly where the power is. So, so that's what we want to know, why we know that one of the signals, the leading indicators for where the home price, the transactions are going to happen and where the headlines are going to be through August, September, October, November. We already have that visibility in the data. So that's pricing. You know, we talked about demand really quick. I love looking at the different leading indicators. This is just Google data on, you know, buying a home, searches for buying a home or real estate market. And you could see this mega spike as we went into the crisis. That's consumer interest in buying a home. We can also see it in things like the traffic to our Altos reports is way up this time. The virtual tours data is way up. And this is really, you know, consumers who are thinking about buying a home. And so you can see it, you know, you see the demand, we know the supply is low, and we see the results in the prices, right? Demand's low, demand's high, supply's low, all of a sudden we have price climbs. There have been a lot of conversations I've had, and you've probably had some of these too, where there were buyers, and I live in San Francisco, and there's a lot of cash on the sidelines in San Francisco waiting for the bargains, right? Like, oh, I can't wait till it crashes because then I'm going to swoop in and buy the bargain, right? And they've been waiting for years, right? You know, like, how long are you going to wait for that bargain? And what happened was, like, that demand was there so quickly that the bargains never materialized, right? We didn't have any price reductions. And so, you know, that's an interesting conversation with buyer clients, people who are waiting for that bargain on the sidelines. Like, how long are you going to wait for that? And what are you looking for? Because we haven't seen it. And then finally, on the demand side, we are really, you know, this big population boom, the biggest ever, is reaching peak buying demographic side. They're 35, 38 years old. They like peak home buying stage. And, you know, they're delayed from previous generations. And they've been delayed because inventory's been so tight. It's been hard to buy a home for the last decade. And so, but now they're peak and they're less afraid to transact in this time. So they're in the action. And they're also in peak earning parts of their life. So those things are all contributing to demand right now, even when we're in a big 15, 18% unemployment time. Let's look at another.
Before you move on, can I ask a question on that? You maybe
Yes, sir.
a little bit later, you touch on the millennial being peaked at the biggest ever. So do you see that, with COVID and a bunch of stuff going on around the country with the protesting, do you see also changing in geographically where the demands are? Because normally the millennial like to go into the city, living with walkability. Now it seems like people are moving out from the condo, the multifamily. What do you see in that, Mike?
So there's obviously one of the big themes, the conversation themes of this time is that, people are leaving the cities, right? Everybody's going to run out of the city to work remote. And so in the for sale data, in the buying and selling data, what's interesting is the inventory shortage and the price climbs, the demands have been across the country. So there's not, we haven't seen all of a sudden, everybody in San Francisco is leaving and everybody's listing their house and selling. They're not doing it. What they are doing though is we do see a couple of things. We do see demand has picked up notably in the second home locations for San Francisco. I'm actually in my Tahoe mountain house right now. And you can see the market in Tahoe is climbing. It started a little bit later in the cycle. So it started late April in early May, where we could see, everything else was started early May, the trend. But you could see it. So in the second home markets, they actually started picking up, but not at the expense of selling my San Francisco home, right? We do see some of the exodus of city to suburb in high-end rentals.
Okay.
So in San Francisco, it's like $7,000 a month for a 3-bedroom condo, apartment. That those folks are like, well, I'm paying for this, and I might go buy in Tahoe and spend $3,000 a month, for a nice house in Tahoe. So there is we see it in the high-end rental data, but not in the sales data.
Good to know. Thank you.
Yeah, you're welcome. So here's another leading indicator. This is percentage of homes on the market that have taken a price reduction. So, and this is national data again. What happens is this, about 35% as a rule of thumb, houses take a price cut before they sell. Sometimes that's strategic, like intentional, like we're going to list this sale, we're going to price a little higher, we'll take one cut. If we didn't take a cut, we didn't price it high enough. Like there's sometimes it's a mistake, sometimes it's like a wacky client, wants to, whatever the reason are, right? About 35% take a price cut. So that's normal. And then when demand is stronger, 35% thought they were overpriced, but we have multiple offers, and only 25%, for example, had to take a cut because demand was strong. And then in really hot markets, maybe that's only 20%, or some of the Bay Area, Palo Alto, it's 14%. Like the supply is so tight and demand so high that it's in that range. On the other side, it's like 35%, overpriced, and all of a sudden demand is weak. Now it's 40%, 45, 50% has to take a price cut to move. That tells you a ton about where the organic levels of demand are in the market. And this is perfectly seasonal, happens every year. The home prices are like it's strongest in the spring, right? And now you've got a property who's stuck around, and all of a sudden it's middle of September. You're like, well, we got to cut the price on this thing to move it, right? So it peaks in the fall and then resets over the holidays, and we get fresh inventory in January, and it starts again. So that cycle is normal. And you can see in this image here, in the second half of 2018, do you remember, if you remember what happened then, mortgage rates started climbing and demand backed off really quickly when mortgage rates climbed. And
Less
so
buying
all of a
power
sudden,
too, right?
what's up?
Less buying power as well.
That's right, less buying power. And so all of a sudden demand backs off, less buying power. And so price reductions climbed out of this band, so over 40% nationally. That says, that was a real signal to us at that time. The good news was that January and all of 2019 rates fell, and then we started 2020 at ultra low rates and high demand, and so our price reductions were really low. Like you could see where we started the year in this super bullish space. And 2018 started super bullish and hit the brakes second half of the year. So this is the price reductions number, and normally you'd get that climbing, but this time, you could see just the beginning of March started to turn its second quarter reductions, and now every week we've been fewer price reductions because inventory's low, the buyers are there, the multiple offers are happening, and that's why. So again, houses on the market now gets a price reduction in August and it sells in September. If you're doing if you're looking around right now and your house has been on the market and there's multiple offers and stuff around you, you don't have to take a price cut now. And so we've had fewer and fewer price cuts during this whole period. Now we're just starting to see, I think this is the third week over week of ticking up of our price reductions. So that says to me that we are in our, the market is trying to get back into its seasonal pattern. So, it's months behind. Like it's, as I mentioned, our seasonality has been stretched out this year. So I would expect our price reductions to climb, but because we've been in such a tight bullish market, we got a long way to go out of there. And so price reductions, though, is one we can keep our eye on to say, where's demand? Is demand backing off? And what is that going to mean for the headlines in August, September, October? You're going to be looking at these in those months. So again, now when you're talking with your sellers, you can prepare them for what to expect the late summer is going to look like with an eye on these. And, like I said, I've got California and Texas, Georgia, and Illinois here. These are all cyclical. California, because California has a chronic inventory shortage in general, California tends to have fewer price reductions than, say, Texas or Arizona. Phoenix, for example, will skew a little bit higher. Phoenix will be like 35 to 45% in its cycle. And so you can see that you'll know your local pattern, and you can see that in your Altos data. And use that for your conversation. But in all cases, this is telling us demand is strong, pricing is going to stay strong through autumn, and our seasonality has been extended, but we're now going to move into late summer. Okay, let's do one more of the leading indicators, and this is the Altos Market Action Index. This is a number, works like a thermometer, for at a glance to say, how's the market? How's the market in Austin? How's the market in Irvine? Whatever and what you find is so this number is looks at supply indicators and demand indicators and then plots it out over time. The higher this number goes, the tighter the inventory and the greater demand. The lower it goes, more inventory has come, demand's weaker. If this number falls below 30, that's what we call buyer's conditions. Inventory is nice supply, you can have your choice, you don't have to jump into action. And if it falls significantly below 30, that's going to be correlated with price declines in the future. So what we like to say is, when we're listing a house, while we have your house listed, I'm going to put this market report in your inbox every Monday. I want you to keep your eye on one number. While we have your house listed, keep your eye on this market action index. If this number is falling while we have your house listed, that's the market giving us a signal. That's the market telling us where demand is. And maybe that means we want to take action, like price action, or we want to, but you keep your eye on this every Monday. I'm going to put this report in your inbox. And so you can see here, the red, this bright red, is March. This is where demand backed off for those few weeks and then subsequently has started climbing again week over week through the rest of the last 12 weeks or so. And so we're in a seller's market. It's pretty much across the country, and it's pretty much through price points as well. So that's the Altos Market Action Index. Let's do this. Let me switch, and I'm going to share a browser screen here, and I'm going to share real quick the Altos system. This, and then we'll look at some reports. When you're looking at so at Altos, what we do, we track every market, every zip code in the country, and we, you're in your Altos, so you have your reports. Every report, this is my whole country view, but you have your local markets, you have your contacts, and these are the folks who are getting your reports. This is also where your new lead conversions land when they convert in the reports and they land here and they start subscribing to your Altos. And then campaigns, these are email campaigns that go out automatically. And as you were talking about earlier about how do we make sure our clients, our sellers, our buyers know what the data is, this is how we do it. we automate the email to them. We put it in their inbox. The data, one thing great about market data is that it changes. It's always fresh. So, there's always something going on to look at. People love looking at our Altos campaigns get about like a 37% open rate because like people want to know what's going on, right? And you could do things like you could see, who's looking at the reports, and I can see people by name, and by, I can see which of my clients are using it. So I can say, oh, I haven't talked to you in a while. What's going on? I noticed you're, checking out the data, and somebody might say, oh yeah, it turns out we're thinking about moving, right? So you can use it for that indicate. So, the contacts here is a list of all the folks who have subscribed, who get the data. You can see, new lead conversions and who's opening their reports and who's using it, and then the campaigns. But let's switch into the data. This is an Altos report. This has got all the data that we've been sharing, we've been talking about, and this is, I have Irvine, and I got a zip code in Austin. I just opened up randomly so we could share. But the cool thing is that even if you don't understand the data, like you're not a data guy yourself, the reports are always readable. So the median price is 1.5 and the market action index is a little higher. So we like, here's the one number I want you to look at. Look at the market action index, and it's slight seller's advantage. It actually ticked down from last month, but we know that we're getting late in the summer, so that's to be expected. The data over here is all the real-time data for right now, with a little spark line of here's where it's been the last 3 months. We can see, we can do things like, I like to do market videos. So you can go and literally go, yep, median price in Irvine's 1.5 this month. There's only 308 homes on the market, and you can actually just read it right off while you're doing your video. We can look then at the data in a bigger form. So here's list price, or let's look at days on market. And how long does it take to sell a home, and what's been happening this spring as the market has, as we've seen our demand kicking in. Or we do everything in Altos, we do by price range quartile. So the high end of the market may be behaving very differently from the low end. And so we're looking at Irvine, the high end of Irvine's $3-4 million homes. Low end's under $1 million. And what do they look like? Well, the difference is 42-year-old houses versus new construction on a tiny lot versus a bigger lot. And then look at this, like, let's look at days on market per price range, 60 days versus 150 days. So a lot of times you'll be talking with a client and they'll say, yeah, I've seen that house been on the market for 6 months. And, you can say, yes, but, you're buying in here in the hottest segment. If you want this house, we need to make an offer now. Right, so you can, use that to communicate in the price range that they're looking in. So all of the data is there. You can, for example, zoom in to the window and say, here's what happened last year at this time. We can look at, for example, our price reductions. We were talking about percentage of homes with price reductions, and see here's 35%, it's totally normal. And then this spring, it started, super hot. We're in the 25%. And then in the last few weeks in Irvine, now it's getting later in the summer, we might want to do a few price reductions to make it moving. It's still in a totally healthy zone. If it started to get, later in the year and we started to get like over 50%, like then you can see, or if it jumps sooner than that, that means that demand is, cooler than expected. And that's something to pay attention to in the future. We can look at, this is a report for Austin, for example, and I just happen to pay, Austin is in the super hot sellers market right now. And you can see that's because everybody's moving out of Irvine and moving to Austin and selling their $1 million home and buying a $500,000 home. There's a few other things that happen in the Altos reports that can be really compelling. One is the search box. So when you're sharing, for example, in social, or you're doing like an Altos will do Facebook ads, and you click and you share it on Facebook ad and you say, hey, how's the market in Austin? Here is 78758. Market's super hot right now. Click through, search for your zip code. So you tell your sphere or your friends on Facebook, or search for your zip code. When they search, and they search for, or we could search for any Austin zip code, 760. I don't know if that's it's an urban one. I just guessed. But when you search for yours, lead conversion form pops up. So the lead conversion is built into the content. So now it gives me an opportunity to share and say, hey, search anywhere you want. When I convert, I land in the Altos and that contact list that I showed you. You get the automatic email follow-up that says, hey, here's your market report. And then you can go along, you can look and see your, who's opening it. And you get the chance to pick up the phone and say, hey, you want to look at the data, and you can start nurturing that relationship. It moves from Facebook friend to somebody who cares about the data, right? And then you get to use that over time. So, and a lot of times, using market data is powerful because it's excellent top of the funnel conversion. Everybody wants to know what's going on. It's always fresh, right? So it's fresh when it's in your inbox every week, or you could send it less frequently every month or whatever. It allows you to nurture that over time. So for example, there are people who have been in your contact database for a long time, maybe a couple of years. And now you see that they're opening the reports, or they say, Long, I've been getting your report every week. Now's the time, for 2 years, now is the time to list my house. And so, we talk about things like, multiple 7 touches a year. We talk about, making sure we nurture these contacts over time. We have a way to establish ourselves as the expert in the domain, right? In the local market. That's all market data. And so that's why it becomes such a powerful process. Some other elements in the report, these are branded for Altos because they're mine, but you have your personally branded reports. We do a lot of work with teams and with brokers, so it may be we'll want to keep separate databases or separately branded reports. There's a share button. So you'd be amazed at how many people hit, oh, I'm going to share this. I'm going to email this to my cousin. And so when you email it to your cousin, now long you know who sent it and who received it, right? So now you have another opportunity to put people into the top of the funnel. A lot of click to share. So, a lot of like, boom, share to Facebook, share to LinkedIn. You can do, when I do social shares, I like to say, here's what the data is doing. Here's, you'd be amazed at what was happening to the real estate market this spring. It's nuts. Here's a report. Use the search box. It's free, no obligation. And then they convert and they drop into your database over time. So that's how the Altos reports work. We have they're all integrated. We have every zip code in the country in the price range segment, so that high end of the market may be behaving very differently from the low end, and that's how the pieces come together there. Let me switch back to my PowerPoint here, and I showed really quick the like using the data to keep your contacts warm. We do every day, every zip in the country every week, but you can send it monthly or quarterly if you like. You have we have our Altos campaigns, but we also integrate with every CRM. So if you've got your own email programs going out and you want to integrate market data into those, a couple of things we like to do. One is the Altos API lets you lead convert for long lead converts, Zillow lead converts, and they search for this zip code in Irvine. It automatically goes to Altos. We grab the Altos report, you drop that link back into your contact in your CRM. Now, when you or someone on your team is looking at that and you're picking up the phone to give that person a call, now you click on the link, you pop open the latest report for their zip code in Irvine. You say, oh, yeah, you know, there's only 308 homes for sale in all of Irvine right now. What are you thinking? Right? You work the data right into your script with your conversation. You can do it on the other side too, when you're just nurturing it and, you know, they're not ready to buy or sell. You're like, great, I like to keep my clients informed. I have a market report, comes out every week. How about if I just drop you on that? And then, you know, when you're ready, and then it's an excellent way to follow up. So lead follow-up, lead nurture, and you know, it's always meaningful. People always love to get the data. So, so that is part of the technique. And the last thing we'll hit on is how we like to do social. I showed the share button in the reports. In Altos, we do one-click Facebook ads. So you don't even have to set up business pages and things like that. We will place the ads. It goes to your report. So the lead conversions go, it's a Facebook lead ad, and you say, hey, you know, here the market, and the way our ad system works is it actually it reads the market conditions and then writes the ad copy for you. The market in Irvine is super hot this spring. Click through to see. And so then they do a lead conversion. You drop the lead drops right into your Altos account. You have these new top of funnel Facebook ads. You know, they're super efficient, and it's an easy way to do it. On the other hand, if you're already doing your own campaigns, which I know a lot of folks in this Lab Coats group are doing, your little URL for your Altos report is always this is Long's Irvine report. So you can drop it into any of those things yourself and use it as click-through reward for any campaign, any social post, et cetera. So that's how those work in that space. So let's wrap up and then we can take a couple minutes to maybe do a last little bit of Q&A. You know, supply is super low. It's supporting home values through the rest of the summer. We're going to keep an eye on the leading indicators, that new listings, price of new listings, the price reductions, and the market action index. And we're going to keep an eye on what's happening in the fall and what's going to happen, how we know what the headlines are going to be months ahead of time. And then we talked a little bit here about sharing the data and how you can reach people with the data. And then the last step is a lot of stuff today. Set up a strategy call with Altos. We set up a coupon code so you get a free month, LCA 2020. So if you go to Altos and you're like, hey, I'm in, just use that, drop it, you get a free month, that's great. You'll set a strategy time session with someone on our team. So we could talk about your business and your part of the market and how you set up your team. And, you know, all of those things are like, you know, we use this CRM and we use Ylopo and, you know, all of the different pieces and how they work together, how we, you know, implement it, how you start ramping it up, or like, you know, I've never done any Facebook ads. What do I do there? So that's what we like to do and help people in strategy session. And that's altosresearch.com. Just zip over there, drop that in. That coupon code will be good for a month. So anybody watching the recording of this can use it too. I do market videos every week on our YouTube channel. So if you want to watch me interpret the national data each week, zip over to the YouTube channel for Altos Research and subscribe to that one. Any other questions along the way? You want to, take a last couple minutes long and
yeah, absolutely. That's awesome. A lot of comments. That is a great presentation, and we'll make sure it's recorded. So we'll share that. So I'm a data tracking geek, so I love this kind of stuff, right? Because knowledge is power. I mean, intel will help you win the war. I mean, it's going to help a lot of people win listings and that kind of stuff. So a couple questions I have on here I'll ask, and then I have a few myself I'll add to as well. What if a zip code is composed of 5 different towns? Can you break down data by city name?
Yes. So the answer is yes. So for us, the reports are city zip. So I live in Los Altos, California, and there's Los Altos Hill. It's the same zip code. Los Altos Hill is a lot nicer. Yeah. And so 2 different reports. Yeah.
It's kind of a similar question. Are you able to break down by type of property and
Yes.
neighborhoods?
Yeah. So every report is I didn't show it real quick, but there's a little tab that is single family versus condo townhome. So boop, you just switch over to the other data type. So, and then inside that, you've got all the price range segments. So the high end of the market. So you may have high end condos or, high end single family homes. And so that's all built into that report. We structure all the Altos data by zip code. And those price ranges in that zip code. So neighborhood wise, we don't have we don't tend to do things like this neighborhood, but what you find is that, well, this neighborhood is really the high end of the zip code. And so that's exactly how you get to talking with your clients about it. I also, it's also a great conversation point. So, clients will say, oh, tell me about this neighborhood. And you say, yeah, I'll tell you about the neighborhood. Let's get on the phone, right? And so, now you have an opportunity to engage.
Yep, great. And then the question that I have is, sounds like it's not just informational, but it can also serve as a lead generator, right? Because you get the hand because you're able to have all the algorithm and a funnel in there to help with that. So another question on here is there a free trial period?
There is a free trial if you use the Lab Coats LCA 2020 coupon code. You get a free month. We don't normally do free trials. You can't just go and get a free trial from Altos because we spend a lot of time we invest in your business in that first month. We spend a lot of money and time on you in that first month. But it's all of our stuff is month to month. So, there's no big long contracts and things like that. So, your risk is really low, but you actually even get a free month right now. You use the LCA 2020 coupon code.
That's amazing. And then can you filter by bedrooms, bathrooms, etc.?
So what we do is in the report, you'll see the price range quartile. So we track every bed, bath, et cetera. And so if you looked at, remember the Irvine report that we were looking at, the lowest price segment in Irvine, those were basically 3-bed, 3-bath homes. And you could see that. And then, the next segment ups were 4 3s and there's 5 4s, et cetera, as you get more expensive. So you see exactly where they price. It also can use that sometimes for things like, if I'm remodeling and I want to expand this house, can I move up to the next price range? In some places, you can do that. In other towns, you've got to move up to an acre lot to get into the next price segment. And so, your return on your investment there might be tighter. So that you see that right in those price range segments.
Awesome. Is there a map view?
We've experimented with some map view. There's no map view right now built into the main part of the Altos product.
Okay. And then a question I have as well is, knowing all this leading and lagging indicator, what is your prediction for the rest of 2020, given so much stuff going on, and what's 2021 looking like? Because your little index indicator showing it's getting closer and closer to either balance or maybe shifting to the buyer's market because seller's market. So what would be something that would push it over there? So 2 different questions.
Yeah. So the good news is that demand is strong enough and supply is tight enough that supports prices, valuations for the rest of the next 3-4 months. Like you can see it now, there's enough stuff like action going on that the transactions that happen in August and September are supported by the supply and demand characteristics now. And then of course the headlines, the traditional headlines are lagging, right? So they're going to be in October talking about September data, right? So you can see the headlines are going to be fine for the rest of the buying season. Now it's all of a sudden comes up on fall, and so normally the market cools off in that time, and it's a normal seasonality. So expect some normal seasonality. So in that sense, I'm bullish for the rest of the year. Right, we're going to end up. It's going to be a 5% home price increase year over year. Like that's a big year. I'm bullish for the rest of the year. There are a couple of things that we are unknown. What happens to those 4 million people that are in mortgage forbearance? Do bad policies happen and all of a sudden they get flushed, they come, like who knows what happens to those people. Those people are in real, that's a big number of homes. It's those are real crises. There's people who aren't paying the mortgage. There's something's got to happen to them, and we don't know. My suspicion on those is that equity's good, supply's light, demand is high, that we can have an orderly transition out of that space. That's my guess, is I don't see signs of panic. But October is a date, and next April it will have been 360 days since, and if you haven't paid your mortgage for a year, some banks we got to do something. So there's something to happen there. So that is a risk factor to keep our eye on. The other thing to keep our eye on is mortgage rates. So we could see for sure, we had, bottom of the market was 2010. We've had year over year, price climb, demand's good, 10 years in a row. In 2018, second half of 2018, mortgage rates spiked, and they didn't even get really that high, but they were higher than they had been. And demand pulled off, price decrease, price cuts happened. You could see it. And right now, one of the reasons that we've got good demand is that money is ridiculously cheap. So if mortgage rates climb for whatever reason, and I don't, I can't predict mortgage rates, but if mortgage rates climb, that I could see demand back way off very quickly. And so then, what happens to home prices for 2021. So what if there's a scenario where, unemployment stays high, big company layoffs, and mortgage rates climb? Those are all kinds of external factors that I don't have a guess on, but I do know that if mortgage rates climb, my forecast for future home prices starts coming down.
All right. One last minute left. We'll wrap up. Any last awesome wisdom or advice for all of the listeners, what they should be doing, using Alto information, any of that nature?
You take your Altos report to your listing appointment, put the report right on the top, and you say, are you a big geek or a little geek? Because even if you're a big geek, you're going to love this, right? You're going to get, even if you're a little geek, I want you to look at one number. When we have your house listed, I want you to keep your eye on this market action index. If this falls while we have your house listed, that's the market giving us a signal. And I want you to know it and to tell me when the market is giving us a signal. And use that powerful communication in your listing presentation. And it shows you have the resources, you have the insight, you have the tools for them. And that is a really powerful reason why they should do business with you. So give it a whirl.
Awesome. Well, wish we had more time. A bunch of other questions comes in, but we'll just have to wait till next time around. Thank you.
And they can, email us, sales at Altos. They can stop by and, we can do a lot of conversation time there too. Do the YouTube channels, et cetera. We can, reach me on social. We can do all those things.
Yeah, post it on our Facebook page with Lab Code, or that you watch a video. Mike might jump on and answer some of those questions.
I will. I'm in that group, and I will definitely do so.
Thank you for your time. It's been awesome, bud. See you later.
Yeah, we'll see you soon.
Bye-bye.